Welcome back. Onto some buzzing stocks in today's trading session, one of which is Eternal. That is also trading with gains of around 2.5%. And that is after the company made an announcement last week that it will cap its foreign shareholding at 49.5%. Now, what does that mean for the stock? How a brokerage is looking at it? Mangalam will tell us about all of that. Mangalam.
Well, Eternal, erstwhile Zomato, has approached shareholders for an approval to cap foreign shareholding to 49.5%. What this means is that domestic holding of the company would be 50.5%. Is this new? Not necessarily, because the board approval has come by. Remember, the company has already raised funds, via a QIP itself from domestic investors. So the shareholding is more domestic than foreign. The management has indicated that as well. The shareholder vote is via remote e-voting between 28th April to 19th May. And this will maintain Indian ownership classification for the company. Why is this important? Because in the long term, there could be potential regulatory risks around foreign ownership in multi-brand retail. There are, foreign investors or foreign companies who are not allowed to do a lot of things in the retail business in India itself when it comes to multi-brand. One of that is stocking your own inventory. So you're allowed a marketplace, not allowed to stock your own inventory itself. So this protects the company from any long-term risks around that. But in the near term, because it is a domestically owned company, there could be a risk of outflow from passive indices, exclusion from passive indices like the MSCI in the near term. Analysts expect a near $1 billion outflow as well whenever that happens, either in the current the current renovation or the next check of the MSCI index itself. What is it that brokers are saying? ICICI Securities says that foreign shareholding cap supports the shift to owned inventory model. It will add about 100 to 150 basis points EBITDA margin in the quick commerce segment, for which they will have to deploy around 1,000 to 2,000 crore in terms of working capital, because they will have their own inventory right now. But can they do that? Of course, yes, because they have cash of nearly 19,000 crores, which the company had said that they're raising for QIP for that very reason. Morgan Stanley has an overweight call as well. They're saying that this will enhance their moat of quick commerce, but increase capital intensity, which may be offset by margin expansion itself. Jefferies as well as CLSA, both of them positive on the stock. Jefferies has a target price of 255. CLSA has a high conviction outperform call with a target price at 375. But the near-term headwind still remains, which is that of nearly $1 billion worth outflows whenever the index reconstitution happens for the MSCI.
Interesting. And even after the stock corrected significantly from its peak, which was around 304 rupees, the stock managed to defend that mark of 200 on the downside and has seen a rebound from those levels. Now at 232 is Eternal. Well, focusing on